friends, welcome back to our channel. So today we will be learning about the automotive industry. So in today's session, here are the few topics that we are going to learn today. Let's start with the sales and revenue tracking. So in sales and revenue tracking, it involves for all the types of recording, including sales transactions, encompassing for the vehicle sales, parts and services. It's entitled for the monitoring revenue streams for the diverse sources like new and used vehicle sales, financial and after sales service to ensure for the comprehensive financial oversight in the automotive industry. Second, inventory management. In inventory management in the automotive industry, it's the oversight of the inventory levels for tracking of the cost of goods sold and ensuring the inventory valuation. Given the sustainable values of the parts and vehicles, for effective inventory management is permanent for optimizing operations and financial performance in the automotive sector. Third, expense and cost control. In expense and cost control, it involves for the monitoring and categorization of all the expenditures encompassing rent, utilities, payrolls, marketing and maintaining the cost within the automotive industry. Implementation of strategic cost control measures in the impression to enhance profitability and to ensure effective resources allocation, voting for the sustainable growth and success in the dynamic sector. Fourth, accounts receivables and payables. Effectively manage for the accounts receivables by tracking outstanding customers' payments and implementing strategies to reduce delinquencies. Similarly, managing for the accounts payables by ensuring timely payments to suppliers. This dual approach helps to maintain positive cash flow, minimum overdue payments and foster strong suppliers relationship, which is crucial for the sustainable business operation and financial stability. For proactive management of both accounts enhance the firm's overall financial health. Fifth, tax compliance. In the tax compliance, it's mandatory to know all the automotive industry by manage sales tax on vehicle sales and maintaining the accurate record of the tax reporting. This involves for the tracking sales transactions, filing timely returns and staying updated with the tax laws to avoid penalties. For proper tax compliance to help the businesses avoid legal issues, enhancing financial planning and supports for the effective tax audits. Contribution to overall operation stability. Sixth, depreciation and automation. In the account of the depreciation and automation of the assets such as vehicles, equipments and facilities according to the accounting standards. This involves systematically allocation for the cost of these assets over their useful lives, ensuring accurate financial reporting and compliance with the regulation requirements. For the proper accounting and depreciation to enhance financial transparency, aids in the asset management and support informed decision making regarding for the asset utility and replacement. Cash flow management. For the monitoring cash flow, to maintain a sufficient liquidity for covering operational expenses, debt, and investment in inventory or expense. This involves for the tracking cash inflow and outflow, forecasting for the future cash needs and implementing strategies to maintain cash effectively. Accurate cash flow management to ensure the business can meet its financial complements, size growth opportunity and sustain day by day for the operations without disturbance. Eighth, financial statement. Generally, in the financial statements, it includes for the income statements, balance sheet, and the cash flow statements. To offer a comprehensive overview of the business financial health, this document reflects for the profitability, financial position, and liquidity, aligned in the decision making and strategic planning. For the accurate financial statements to ensure compliance with regulatory requirements for the enhanced transparency for stakeholders and support effectively for the management of the company's financial resources. So, here are some KPIs that are commonly used in the automotive industry to measure performance and track success. Let's check out. First, gross profit margin. To calculate the gross profit margin to evaluate the profitability of the vehicle sales, parts, and services. This metric helps to assess pricing strategy and cost management, guiding decision to improve revenue retention and overall business profitability. Second, inventory turnover ratio. Measure how quickly inventory is sold and replaced. A high inventory turnover ratio indicates for the effective inventory management, minimizing holding cost and enhancing for the cash flow by ensuring products are sold before becoming an obstacle. Third, day sales outstanding. For the track of the average number of the days it takes to collect payment from the customers, lower the day sales outstanding value signifies for the effective receivables management. It reflects for the quicker cash collection and the better liquidity for the business. Fourth, debt to equity ratio. To assess the company's financial leverages by companies its debt to equity. Lower ratio indicates reducing financial risk and reliance on the debt, reflecting a more stable financial position and a better capacity to withstand economic fluctuation. Fifth, customer satisfaction and retention. To monitor customer satisfaction score and retention rates to evaluate service quality and the foster for the brand loyalty. High satisfaction score and retention rates indicates effective customer service strategies, contribution to the long-term customer relationship and business success. Sixth, market share. To track the company's market share in the automotive industry to access its competitive position. Monitoring change in the market share helps for the identifying strengths, weaknesses, and opportunities for the guiding strategic decisions to maintain or increase market pressure. Seventh, return on investment. To calculate return on investment for business activities like marketing campaigns or facility upgrades to garner for effectiveness, comparing return on investment for the cost helps to optimize resources allocation, identifying for the high performing strategies, and maximizing profitability across the different area of operations. 8. Earning before interest and taxes. To access the company's operation for the profitability by analyzing earning before interest and taxes, margins and trends. Earning before interest and taxes reflects for the earning before interest and taxes, providing an insight into the core business performance and effectively aligned in the strategic decision making and financial planning. Ninth, employee productivity. To measure employee productivity by tracking metrics such as vehicle sales, service hours billed, or parts sold per employee. Higher productivity corrects for the improved profitability, indicates for the effective utilization of the human resource and operational efficiency within the business. 10th, cash conversion cycle. Analyzing the time analyzing the time needed to convert cash invested in the inventory and receivables back into the cash from sales. A shorter cycle for the enhancing liquidity, reducing the need for working capital and improving the company's financial health and operation effectively. With these financial metrics in mind, the company can make informed decisions to drive growth, enhance profitability, and to achieve a long-term success in the automotive industry. Thank you so much. See you at the next video.